Okay, so I'm just starting. So can you see the slide?
Yes, sir.
Okay, so we had done a little bit. I'm just revisiting a little bit what we have done on the fag end of the last class. So I told you that all the companies who are going for an IPO or an FPO or any other issue permitted by the SEBI, so they have to file an offer document with SEBI, and the rules are given under regulation number 25 and 123. Of course, 25 stands for IPO and 123 is for FPO. Okay, so prior to making an IPO FPO, the issuer shall file 3 copies of draft offer document with SEBI with fees as specified through the lead manager. Now, the lead managers are nothing but the merchant bankers. Okay, so they have to file an offer document. Now, this offer document is ultimately called a prospectus, and it is filed with the registrar of companies after the IPO. Is going to start. Okay, when the SEBI has given the approval, everything is done. It becomes a final document, and the price of the issue is also finalized. At that time, final copy is filed with registrar of companies. Okay, and we have ROC offices everywhere in India, so all companies will have their ROC offices in their in their town or city, so they have to file this. Now, this offer document, so I'll ask Shishti to just read. Okay, so this is a very important document and it contains a lot of information. Okay, so because this information is used by the prospective investors to decide whether they are going to invest in the company. Okay, so this gives you a complete details about what is the offer. Okay, what is the objects and everything. So read this, Shishti.
Yes, sir. Key contents of the offer document. Cover page, front page, name of the issuer company, name of the issue, public issue, offers for sale or fresh issuance, issue size, number of shares slash amount or the price band or issue price in fixed price issues. Then the minimum lot size, the opening and closing date of the issue, a disclaimer such as that the securities have not been approved or disapproved by SEBI and that the offer document contains the relevant disclosures, important dates and lead manager registrar, etc. These features are a part of making the document easily identifiable and to alert investors.
So this is the front or a cover page will consist the name of the issuer. What for this issue is coming. Is it a public issue for offer for sale or fresh issuance? Then issue size, number of shares and amount, or if the price band, if the amount cannot be specified because the price is not fixed, so a price band in case of book built issue, or issue price in fixed price issues. So whenever a company is issued a price in advance without issuing a price band, then in this case only the profitable companies who meet the financial criteria, they can fix the price immediately. But the companies which are not profitable, who have not met the criteria of the regulations, so they are allowed only through book built issues. Then the minimum lot size. If you remember, I just on WhatsApp this thing, I've given a small this thing, so I'm just opening that. So because this slide is there in your this thing, but it was somewhere in the middle. So if you can see which is the first company I mentioned. This was this I made about what couple of years back. So which is the first company, Srishti?
Devyani International Limited.
Okay, have you heard of the name Devyani International? Anyone? We all go to their outlets quite often. Of course, now some people may prefer other brands, but this was a very popular brand. The KFCs and Pizza Huts, so they are the franchisees in India for these brands. Okay, so they came up with a issue, and what is the price range? Between 86 to 90. It was an IPO as well as OFS, 100% book building, and the merchant bankers were Motilal Oswal, and the lot size was 165. Now the whole idea was to show that all companies have to mention about the lot size. So this is one lot. So everybody has to apply for one lot. Okay, fine. So in multiples of lots. So all the shareholders, the prospective investors have to apply in multiples of lot size. For example, we have Life Insurance Corporation of India, Burger King, and then IRCTC, and then the Paytm. That issue came at that time. Okay. So which company has the lowest lot size? Srishti?
197 communications.
This is Paytm. Okay, fine. So anyway, I just thought I was, okay. So this is basically, the minimum lot size, when the issue is going to get open, when it is going to get closed, then a disclaimer that, by giving this offer document when it is approved by the SEBI. So SEBI is not certifying that these securities are good or bad. The offer is containing all the information with regard to financials, regard to the risk and all, everything is there. So investors have to put their money on their own risk. So SEBI is just approving that they have declared everything and whatever the norms have been met by them or not, and then only the SEBI is going to approve the offer document. Then the important dates, when the shares will get listed, when the shares will get allotted. Lead managers, every company has to appoint a merchant banker. So because merchant banker is going to, help the company in the whole process. Then the registrar. So I'll talk about the registrar a little bit. So, then, these are the, okay, I think I'll just change the slide because I revised this slide and why it is not coming. Yeah, final. Okay, so I'm just opening the new one where I've made some changes. So I'll just show that. So can you look at the slide? Shristi, is it visible?
Yes, sir, it is visible.
So I'm just going back to the. Okay. So, what now, we must understand, what the registrar does. Just read this.
What the registrar does, they receive and process all investor applications, including forms, payments, submitted in the public issue. They check applications for completeness or validity. Example, correct lot size, DMAT details, ASBA versus UPI, other payment mode. In conjunction with the issuer and lead managers, they help determine the basis of allotment, how many shares each successful applicant gets, especially in case of oversubscription. They coordinate the crediting of allotted shares to investors' demat accounts and processing refunds or unblocking the amounts for unsuccessful or partially allotted applicants. They maintain records of applications, allotments, refunds, and provide post-issue reporting, often as required by regulations.
Okay, Shristi, I think your voice is dipping a bit. So, Mananya, are you there? Or Mahalakshmi?
Yes, sir.
Okay, Mananya? Or Mahalakshmi?
Yes, sir.
Huh?
Yeah.
Okay. So, I would like that if you can
Am I
just read
audible?
the. You're audible. Can you read the first line again?
Yes, sir. What the registrar does, they receive and process all investor applications, including forms and payments, submitted in the public issue.
Okay, fine. So your voice is coming perfectly all right. Maybe Shristi is having some trouble with this voice. Are you traveling, Shristi? Okay.
No, sir, I just think it might be my device.
Maybe your voice was dipping, so it was not coming, perfectly. So that's why I had to ask Mananya or someone to read. Okay. So, again, coming back to, so registrar is very important guy. He does all these activities. Basically, it helps to maintain the records of applications, allotment, refunds, and everything. Okay. And it, in conjunction with the issuer and the lead managers, they help determine the basis of allotment, how many shares each applicant gets. Okay. So all these things. Then, who are the major registrars? So these are very important persons apart from the merchant bankers. So I mean, it is between the merchant bankers and the registrars. So they do most of the job. So these are the five, major registrars to public issues. Just read them. Uh, Mananya, were you reading?
Right.
Yeah.
Major registrars to yes, major registrars to public issues, IPOs or FPOs in India. First, Link In Time India Private Limited, KFin Technologies Limited, formerly Carvi Fintech, BigShare Services Private Limited, Cameo Corporate Services Limited, Integrated Registry Management Services Private Limited.
So these are, the top five registrars in India. And the second one is called KFin. Now, the KFin is a very popular registrar. Earlier, it was called Carvi. You might have heard the name Carvi. Of course, they were banned by SEBI for some irregularities which they have done earlier, but it has come back with a new name. Okay. So these are the registers. They help basically. Okay. Now, can you read further?
Key contents of the offer document, risk factors, a detailed section listing the risks faced by the issuer company, its industry, business model, regulatory environment, etc. These risks help investors evaluate downside possibilities.
So all the companies, they have to specify what are the risk factors associated with the industry, with the company, okay, or with the regulatory environment. How can the regulatory impact their profitability? Okay, so they have to mention all these risk factors so that the applicant who is applying, he must know what are the risks involved in putting this money. Okay, Mananya.
Objects of the issue or use of proceeds, what the company intends to do with the funds raised, example, expansion, modernization, debt repayment, working capital diversification. This must be clearly disclosed in the offer document.
So, all the companies, they have to mention, how they are, what are the objects of the issue, how they are going to utilize the funds which they are going to take from the public. Are they going to repay debt, or they're going to expand their company, or it is going to meant for their, working capital requirements or for diversification. So they have to clearly mention in the offer document. Further.
Industry and business overview. Profile of the company, history, nature of business, its services or products, market position, the industry in which it operates, competitive landscape, regulatory environment, key business strategy, growth prospects, location of plants or offices.
So they have to mention all this information, about the industry and the business overview. Okay, fine. So I'm not going to there. It is all self-explanatory. Okay, read further.
Key contents of the offer document, management discussion and analysis or financial information, historical financials, balance sheet, profit and loss, cash flows for the past few years, key ratios, auditors' reports, accounting policies, projections or forward-looking statements may also be included with caution if book build issue, price band, and number of shares to be issued may be indicated in a later stage.
So basically, in this offer document, they are going to give, historical and financial statements like profit loss balance sheet, the auditor's report, okay, what accounting policies they are following, and they can also give forward-looking statements, how the company is going to do in future, okay, and then in case of book build, the price band and number of shares to be issued. Okay, read further.
Capital structure, promoters, shareholding pattern, share capital before and after the issue, shareholding of promoters, promoter group, public, pre-issue and post-issue, the identity of promoters, their background, promoters' contributions, significant shareholders.
So they have to give, complete picture about what is the capital structure, how much, what is the share capital before and after, okay, who are the promoters and the promoter groups, and the major, shareholders details. So they have to give, all these details so that people are aware, who are the promoters, what has been their track record. Okay. Read further.
Issue details, terms of the issue, issue versus offer for sale, offer size, allotment methods, underwriting, book running lead managers, pricing, floor price or price band for book build, or the fixed price for fixed issue, minimum application size, allotment process, allottee categories, retail, QIB, non-institutional, listing, proposed stock exchanges, basis of allotment, lock-in requirements, timetable.
So, all this, they have to give complete details about, the issue. Whether it is how much is for the fresh issue, how much is offered for sale. Just recently, I mean, today itself, or maybe yesterday, the Lenskart has, opened their issue. So they are going, this issue is for about 7,000 crores. So 2,000 crores is the fresh issue and 5,000 is offer for sale. How much money is going to be utilized for expanding the company and how much is going to be for the existing shareholders. Because offer for sale money will go directly to the existing shareholders. They might be a promoters or big investors in the company. Then, who are the lead managers who are underwriting the issue, and the book running and lead managers, the merchant banker itself. Okay, so then the pricing, if it's a book build, they have to give a price band or a floor price, or they can even give fixed price in case of a company which is highly profitable, so they can avoid a book build issue. But most of the companies nowadays preferring to issue their shares through the book build route, rather, even if they are profitable, they have a profitable past. Then what is the minimum application size, that is the lot size. Then the categories of allottees, how much they are going to those categories. Retail investors, like people, normal public applies. Then the QIB, which is non qualified institutional buyers, all the 13 big financial institutions in India which are registered with SEBI, so they are combined called QIB. And non-institutional investors like HNIs, or the anchor investors. Okay, so these are the categories of investors. Then, which are the stock exchanges where they are going to, I mean, they are going to list. Is there any lock-in period? I mean, whether the new shareholders can, sell immediately or they have to, I mean, keep the shares for some time. I mean, of course, this can be a condition for the rights issue, but normally for an IPO and FPO, there is usually not a lock-in period. Okay, then further.
Promoter, management, and corporate governance. Details of board of directors, senior management, their background, remuneration, relationships, corporate governance practices, declarations and related party transactions, shareholding of directors, key management personnel.
So, they have to give details about the promoters and, what is the corporate governance track record. There is a regulations under the LODR, which is the, second set of regulations, that they should have some independent directors and there should be some women directors. And there are a lot of, conditions which have been set up under the LODR. So they have to see that they are going to meet them. Okay. So detail of board of directors, senior management, their background, how much remuneration they are getting. Then whether they are having transaction with some related companies and they have been properly disclosed by the company and they are doing these transactions at the arm length. They are not giving any kind of a fair treatment. They have to give, even if they are doing some transaction with the related party, I mean company. So they have to mention all the detail under the corporate governance kind of a template which is there under the LODR. Okay. Then, yeah, read further.
Legal and other regulatory information, litigation and disputes involving the company, promoters, directors, or group companies, major regulatory or governmental approvals required, material contracts, undertakings, commitments.
So the usually whenever a company comes with a IPO or an FPO, so they have to mention about the major disputes which they're having, or some law cases which are legal cases which are being filed on the company or its promoters or directors or group companies. So they have to give full detail, whether they would have any kind of a major impact on the company, okay, or any major regulatory or governmental approvals would be required. Like for example, it's a real estate company, so they may require approval of RERA or it's an insurance company, they may require some approval from IRDA. So they have to mention all these details. Okay.
Taxation, dividend policy, other matters, dividend track record policy, if any, tax considerations relevant to investors, transferability, investor rights, mechanism of refunds and allotments.
Yeah. So, they have to tell, what has been is there any dividend policy the company has? How the company has been, paying dividend, what is the tax record? Then, what is the taxation, kind of, they are paying. Okay. So, any tax considerations, which is relevant to the investors, so they must disclose that. And the transferability and other things they have to mention. How they are going to refund, the money if the shares are not allotted. Okay. Fine.
Undertakings and declarations. Undertaking by the company that all material information has been disclosed, nothing has been concealed, and every reasonable effort has been made for full disclosure. Certificates of due diligence by lead managers.
So they have to give some, undertakings that the company, that all the material information has been disclosed, nothing has been concealed, every reasonable effort has been made for full disclosures. Okay. Then they have to give a certificate of due diligence from the lead managers. So the lead managers are going to issue a due diligence certificate. They have carried out a complete due diligence. They have gone through the records of the company. They have seen all the assets which are owned by the company. They are actual the owners. They have mentioned about their employees, how many employees they have got. So they have to say that they have gone into each and every aspect, and the company exists, and it just has a real existence, and whatever is stated in the balance sheet and profit loss account, I mean, is majorly all there. So they give a comfort to the prospective shareholders. Okay. Then now what I'm doing is that I'm just moving on to one case study, which I have just prepared, and which is very important for your take home paper. Okay. So I'm just going to open that. Yeah. Can you see the case study, Maranya?
Yes, sir.
Okay. Now, there will be a take home paper where each and every student has to analyze one, IPO. Okay. And give their findings. And I'll be, giving a complete details about what they are supposed to do. But whatever is mentioned in this case study, at least all these things will be there in your, take home paper. Okay. So I'll give a complete template, what it should contain separately. But this case study covers each and everything. Okay. Though I have prepared this case study through chat GPT, but you can always take the advantage of the chat GPT and prepare it. But I would make a test to find out whether you have completely made it out of chat GPT or you have added your own contents also. So I have a kind of a mechanism to find out whether it has been completely copied from chat GPT, or chat GPT has only assisted you to making this case study. Okay. So you have to add your own flavor, and I want that each of the students should make a PPT, and then as well as report like this, a Word file and a PPT must be submitted. Okay. And I'll share a Google Drive where you people have to submit all your information. First you have to send to an email, and after sending and date is over, you can send me a mail through your own ID. Okay. First it will be going into your case Google Drive. Okay. So this is the case study, but I'll talk about the case study, I mean about the take home paper a little later further, and if you have any questions I'll answer them. Okay. So case study, can you read, Mananya?
Case study LG Electronics India Limited IPO 2025, updated with valuation and peer comparison. Introduction in October 2025, LG Electronics India LGEIL, the wholly owned Indian subsidiary of South Korea's LG
Oh, sorry, sorry.
Electronics,
I'm just
launched
making
one
it
of
little.
India's largest IPOs. Yeah.
I'm just putting it back. Okay.
Can you zoom
I
in,
was just
please?
trying to make it a little bigger, so it actually changed its. Okay. So just sorry. Now you can read. Yeah. You're
Uh,
in. Yeah. You're
in
able to.
October 2025, LG Electronics India, the wholly owned Indian subsidiary of South Korea's LG Electronics, launched one of India's largest IPOs valued at Rs 11,600 crore. The listing represented LG's strategic commitment to India's consumer durable sector and its desire to integrate local investors into its growth story.
Okay. Just hold on. Now,
Company
just hold
background
on. Just hold on.
founded in
Okay, just hold on. I mean, first I'll cover the introduction part. Now, I have prepared this case study. This has been again updated with valuation and peer comparison. So that, whenever a company is issuing shares, it has to compare, with the other companies, how they have been, listed, what is their price, at what P multiple they are trading. So it gives you a comparison, whether this company is worthwhile or not, whether it has been, issuing shares at a good price, whether you should go and for the and apply for the shares. So a peer comparison is always very important. So which I am going to discuss, when we come to that section. So this issue came October 2025, which is the last month itself. It's just gone. So we all know there is a company called LG Electronics India, and which is a has a it's a subsidiary of the South Korean company LG Electronics, and this was one of the largest IPO. 11,600 crores, and the whole idea of was to make it integrate this with the local investors, because local investors were not having any shares of LG Electronics, because it was a subsidiary which was not listed in India. So it got listed in October. Now Indian public is also shareholders of LG Electronics. Okay. Now we come to the company background. Okay. Sorry. Company background. Mananya?
company background. Founded in 1997, headquarters at Greater Noida, Uttar Pradesh, parent company LG Electronics, South Korea. Business segments home appliances, TVs, air conditioners, and kitchen appliances. Distribution 25,000 plus retail touchpoints across India. LGEIL has become a top three player in India's rupees 1.5 lakh crore consumer durables market through product localization and robust after sales service.
Okay, I think it's all self-explanatory. We can go to the third listing. Just read, Mananya.
Industry context. India's consumer electronics industry, worth $20 billion in 2025, is growing at 9 to 10% CAGR. The drivers include rising middle class income, PLI, production linked incentive scheme for electronics. The production linked incentive scheme is a government initiative by India launched in 2020 to boost domestic manufacturing and reduce import dependency, urbanization, and smart home adoption. LG India, already benefiting from the PLI scheme for white goods, sought to expand domestic manufacturing and reduce import dependency.
Okay, now the very important part is that this industry is very big, which is about $12 billion. I mean, in 2025, it is growing at a good pace of 9 to 10% CAGR, and because it has happened because of the rising middle class income. And the second one is called the PLI, Production Linked Scheme or Incentive, which has been given by the government. So basically, the whole idea is to reduce import dependency. So we can manufacture a lot of goods which we are importing from outside. Rather importing, we should manufacture them in India. Can you think about any company which was recently about a year back, which was set up in India, where we have where we were importing a lot of stuff from outside, but now we are manufacturing it ourselves. Can you think about a company? So I've got some example I'll share, but in the meantime you can just think about.
So is it the Apple iPhone production?
iPhone, yeah, Apple. So very good. So Apple is one company which has had set up their plants through various of its associate companies. They have set up their plants in India. So 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 I'm just going to show you that. Okay. So you were saying about these are the examples. Mobile manufacturing. Example number one. Can you read this? Okay, so it will start from here. What is a PLI
Example
scheme?
1.
Sorry, what is a PLI scheme? Yeah, read from here.
What is the PLI scheme? The Production Linked Incentive Scheme is a government initiative by India launched in 2020 to boost domestic manufacturing and reduce import dependency. Under PLI, companies receive financial incentives, cashbacks, or subsidies if they increase their production and sales beyond a set baseline. Goal: to make India a global manufacturing hub. How it works: incentives are linked to the incremental sales of goods made in India, usually 4 to 6% of sales, duration usually 5 years, sectors covered, over 14 sectors including mobile phones, electronics, pharma, auto, textiles, solar modules, and more. Example 1: Mobile manufacturing, Apple, Samsung. Sector: Electronics and mobile phones. Launched in 2020. Incentive: 4 to 6% on incremental sales of phones made in India. Real example: Apple's manufacturing partners like Foxconn, Wistron, and Pegatron set up or expanded their factories in Tamil Nadu and Karnataka under the PLI scheme. Result: Apple now produces iPhones worth over rupees 1 lakh crore annually in India. Exports of smartphones surged from rupees 40,000 crores in 2021 to over rupees 1.5 lakh crores in 2024. India became the second largest mobile manufacturer in the world after China.
Okay, so this is the one example. So I'm not going to cover all the example. So the PLI scheme has given a lot of boost. Okay, so that we can have those products being manufactured in India. So basically, it is I mean to compete with China particularly because China is the manufacturing hub for most of the goods. Now India is also attracting those kinds of because through these incentives, many companies have come to India. Okay, so we will have a break at after at 12 o'clock. Okay, so once we did a little bit more. Okay, so okay, sorry. So we were doing the LG Electronics. So we'll move on back to that. So industry. Oh yeah. Now just read this IPO details.
Sir, I think Manana has some mic
Huh?
issue. She's left the
So
meeting.
can you read? Is it there
Sir, I
available?
think
Huh? I couldn't get you. What you are saying?
yes, IPO details.
Okay, okay, sure.
Sir, I just said that I think Manana has left
Is
the
that
meeting briefly
Mahalakshmi?
because of some
Is
mic
that Mahalakshmi?
issues. Yes, sir.
Okay, Mahalakshmi,
Going
please read.
now.
Yeah.
IPO details. IPO open date was in October 25. Issue size 11,600 crores with a fresh issue plus offer for sale. And face value rupees 10 per share. Price band 70 to 720 to 780 per share. Listing exchange NSE and BSE. Lead managers were Kotak Mahindra Capital, Morgan Stanley, and JM Financial. Post listing valuation 60,000 to 65,000 crore rupees. Issue composition 60% fresh issue, 40% offer for sale.
Okay, so these are the IPO details which have been given to you. The issue was opened in on October 2025, and the issue size was 11,600. The price band is also given. It was listed on National Stock Exchange. The lead managers were the Morgan Stanley, Kotak Bank, JM Financials, and the post listing valuation was supposed to be around 60 to 65,000 crores. So if we just revisit and see the screener and find out what is the current LG Electronics. So I'm just saying what is how the LG is doing basically, LG Electronics. Okay. So if you look at LG Electronics, there the what is the market cap? What is the this thing market cap currently, Malakshmi?
1,12,921
So it is much
crores.
beyond that 65,000 crores. Okay, and the current price is 1,664. Okay, so if you look at what was the price they have mentioned, the price was between the price band was 720 to 780. Okay, so today the price has gone within a matter of few days, the price has doubled. Okay, and if you look at the chart also, then I think we will be able to have a clear picture. So this is of course the price has come to this 1660, and it had 1 month, so we can say so this is the price chart. Okay, anyway, so let's go back. Okay, what was the object of the issues? Can you go through, Mahalakshmi?
Objectives of the issue. First, manufacturing expansion to establish new production lines for refrigerators and washing machines under PLI. R&D investment, strengthen AI-enabled smart appliance development in Bangalore lab. Debt reduction, repay high-cost borrowings to achieve debt-free status. Brand visibility, reinforce LG as an Indian-listed MNC. Parent monetization, partial stake sale by LG Korea for global portfolio realignment.
So what was the object issue? So of course the last one where the parent monetization, where the LG Korea, because this contained offer for sale, so the LG Korea was offloading their shares from the company. Okay, so it becomes a global portfolio. I mean, because they were doing it because of the global portfolio realignment, that was the strategy. Then they wanted to expand the manufacturing, establish new product lines, then strengthen AI-enabled smart appliances. Okay, in Bangalore. Then debt reduction. So they wanted to reduce their high-cost borrowings to achieve a debt-free status. So we'll understand how much debt they have got now. Okay, which is contained in this. Or we can even go to the screen and check that. Brand visibility, reinforce LG as an Indian listed MNC. Okay, because it will be now it is listed on the India. So these are the updated financial highlights pre-IPO. So if you look at the top line of the company, it was growing. From 19,800 crores, it grows to 24,366 crores. So company had a good growth in all the 3 years before the IPO came. The net profit also jumped from 1,300 crores to 2,200 crores in the last 3 years. The margins have also improved from 10 to 13%. The ROE also went high, 17, 20, and 23. That look at the debt equity ratio. So they were already having a 0.9:1, and now it has become debt free in 2025. Okay, and it came to 0.41 in 2024. So the profits have jumped. Okay, and it is PLI incentives. Okay, and now it has become nearly a debt free company. Okay, so if you can just go and see whether the company has become debt free in the as per the screener. So if you look at debt to equity, it's 0.07 now. Okay, look at their balance sheet. Their debt is borrowing is only 428 crores now. Okay, fine. And the share capital has gone up after the issue, fresh issue. So, so the company has become, they have reduced their borrow. Of course, in terms of absolute amount, it's gone up a bit, but in terms of percentage to the debt or equity, it has shown a good performance. Okay, so let's go back to this thing. So now very important this thing, the justification of the issue price and peer comparison. Okay, so now these are the peer comparison. So which are the companies, Mahalakshmi, which are there over the comparable companies in India? Just read the company's name first.
LG is the company which we're discussing about. Its peers are Whirlpool India, Voltas Limited, Blue Star, and Dyson Technologies.
Okay, so these are the companies, which are the comparables when you compare them with, LG Electronics, and each company's revenue is also given. So which company has the highest revenue in terms of all?
LG only.
LG, which are coming with an IPO, was the
Or
highest in terms
the
of top. And what about the profit? Profit after tax? So again, the LG is having the highest, isn't it? Now look at the P ratio of all the
yes.
companies. So tell me, is anybody, it's a question which is open to all who are listening, is this company, look at the P ratio and EV to EBITDA and tell whether the share price which is offered by LG was overpriced, underpriced, or it was perfectly priced. It was worth investing at that time or not, looking at the peer valuation. Shrishti, Mahalakshmi, Ranjana, Mananya, all those who are present, Ashwin, Suryansh, anybody?
So looking at the PE and EV by beta, it is near like the average of the industry only. It's not very little and not very high. So just from the PE and EV by beta, it'd be like that this is rightly valued.
Okay, very good. So this is what Shrishti? Shrishti was
Yes,
talking?
sir.
It was Shrishti or who was there? Who answered?
Yeah, sir,
Okay,
it was me, Srishti.
okay, okay, good. अब मी तो मुझे अपना नाम बताओगे पता चलेगा because I can't hear you. I
So
can't,
it
but
would
I
be
can. I'm not looking at the screen, from where you answered. Okay, fine, but I could recognize your voice. So, so anybody else? Okay, I'm just going to see who are all there. So we'll
so
have a
it
break
was
after this.
undervalued.
Huh? Pavan? Yeah.
It was undervalued as it was listed on 50% premium.
It was listed at a premium. How much premium?
50%. I got it.
50% premium. So, of course, it was listed at a premium. Definitely,
Yes, sir.
that shows that the shares were rightly priced, and it got thumbs up from the
So
investors.
50% is much more. It means that it was undervalued.
You can't say that it is undervalued, or by looking just at the premium on the date of this thing. That definitely gives you a kind of a pointer towards that. But as I said, the markets can always be very optimistic about, because there are a lot of people who are investing, and the demand comes from a lot of people. So from particularly retail investors, so they are generally very optimistic about certain companies, and they push up the prices. And but if we are able to sustain this price for quite long, then we can say that it was rightly priced. But as of now, it looks that it was perfectly priced. Of course, it was one of the biggest company in India in terms of revenue and profitability, and with even if like Shristi was saying, and you can add one more thing, like suppose if you look at the growth prospects of all the companies, okay, so which company would have the highest growth prospects, looking at the 50 kind of a percent of a kind of a premium? So Pavan, why this company was, what can be one possible reason why you had almost like 50% jump of the price after the listing? So what can be the
It was overly subscribed, I think.
it was overly subscribed, but
So it was overly subscribed.
it was overly subscribed. Now, what was the reason for that? I mean, as it was, the valuation showed that it was almost fairly priced compared to its peer. But what could be the differentiator? Okay, anyone? Why people thought that it has got more legs to run compared to the other competitors? Yes, Mahalakshmi.
So a small impact of brand name also can be there.
Okay, Mahalakshmi. Yeah, good. Mahalakshmi.
So I was also thinking on the fact that like LG has a strong brand
Strong
strength and
brand. Okay,
market
strong brand.
leadership in
Okay.
India.
Okay. Anyone else? Ashwin, Daksh, Harshita, Ishani,
So
Mananya.
I
Yeah,
think
Daksh.
that
Yeah. तो दक्ष बताओ कि क्यों या
LG, if you look at the PAT number for LG, it's almost 4 times the next largest company that you're looking at, the peers. So
ओके
in terms of size, it is much larger than the competitors, but it still has a similar PE and EV by EBITDA ratio. So maybe the market thinks that despite such size, if it is demonstrating such growth figures, then that means that the company has a higher growth potential in the future, which is why they're
So the more important is
valuing it
the
more.
future prospects of the company. If the company is expected to grow at a much faster pace compared to its peer, the growth in earnings and all matters more. Okay, maybe that the company has grown so far and it has, I mean, a great turnover, top line and the bottom line, whatever. But if the growth prospects are good, then we can always say that with all these, kind of, so company was not charging any premium for its growth, because the company was is growing at a good pace compared to its competitors, assuming that it is growing at a much faster pace. We have to look at the growth parameters, okay? And if the growth parameters suggested the company is going to grow much better than its peer, then the company was not charging any premium. So it was neither overvalued, and we can say it was valued almost along with the peer, but it was rather undervalued, compared to the others, because it has a great future compared to the others. Okay, fine. But companies like Whirlpool, Voltas, Blue Star, these are big companies. Okay, and LG Electronics has been growing at much faster pace because it's suggested by the turnover. Okay, so now read this valuation justification. Mahalakshmi.
At the upper band, at 780 rupees, LG the India's implied PE was 27x in FY 2025 per share. This positions it in line with Whirlpool and Voltas and below Dyson, despite higher scale and profitability. Investors viewed the pricing as fair to attractive, reflecting strong brand equity, steady growth, and low leverage. The post-listing premium of 18% validated the issue's pricing discipline and market confidence.
Okay, just hold on. So, as it's saying that, that this company got listed almost like 18% above its, the price at which it was, the first finalized. So, they view the pricing as fair to attractive because of the strong brand, because of the steady growth and low leverage. Because again, the factors which led to the company was going to be debt free almost, okay, after this issue. Of course, the company still have a very small debt of 400 crores. It has a major, more strong brand, good growth in future, and so this, all led the share price to be, I mean, subscribed almost like how many times, I don't know, but it is gone up by almost like 50% from the price at which it was listed. So this part of, is very important when you do your, carry on paper. So you have to spend a lot of time, okay, on the justification of the issue price and peer comparison, and give your own assessment, whether, according to you, this was, very attractive. The company gave a lot of, money on the table for the investors so that they can make money if they invested. So you have to spend most of your time, I would like that, and even, you should go into the, look at the investors, kind of, sorry, the analyst growth figures of these companies, okay? and see whether the growth also justifies, the listing price. So go into the growth and see, how go over the next 3 to 4 years of growth prospect of the company. Okay. Then we have the subscription and listing performance. Okay, read this.
Uh, in category QIP, which is institution, subscription times was 12.4x, NII HNI is 9.1x, retail investors 6.3x. Overall, it was 9.8 times oversubscribed. Listing price was 920 rupees with an 18% premium. Market cap 63,000 crores. 1 week gain was 23%.
Okay, if you look at the, this list, now we will be just ending and have a break at this point, but little bit more about what I have to say about another 2 minutes, and then we'll have a break for 10, 15 minutes. So there's a QIB, qualified institutional buyers. There, these are the institutions, basically 13 institutions. So from their side, the issue was 12.4 times oversubscribed. Okay. NIIs, which are the non-institutional investors, the NIs, HNIs, high net worth individuals, they oversubscribed 9.1 times. Retail investors, they invested, their money 6.3 times. So overall, it was oversubscribed almost like 9.8 times. Okay. Now, what does this suggest? If you look at this category-wise subscription times, what does it tells you? Shrishti? What does it tells you? What is the story? QIBs, it was
So
12.
if
Yeah, yeah.
so if institutional and retail investors show a strong demand, like we can see the number of times they have subscribed, then it signals that there'll be a strong market appetite, meaning that the listing price it will go up.
Okay, very good, very good. Wonderful observation, Ratan. So that's the best observation that, the major investors were the QIBs, institutional investors. They have, all the, kind of a, because, it includes mutual funds, it includes the, top financial institutions of India. So they were very gung-ho about the company, and they gave thumbs up to this company, and the company, this was got oversubscribed, 12.4 times as against, 10 times overall. So the institutions were, more, finding this attractive to be very attractive. Okay. The retail investors were, very less compared to that, half a time. Okay. So retail investors participation was also good. It was 6.3, but the NIs and the QIVs, they had given the, more number of times they applied. Okay. Then the listing price was 920, and which was almost like 18% premium. The market cap came to 63,000 crores. Okay. And in 1 week it gained 23%. So if you look at, the market cap now, the market cap is 1,12,921 crores. Okay. And this is currently trading at a P ratio of 51.3 and price to sales ratio of 4.1. And then, then we have EV to EBITDA is 32.5 times. Okay. So, which is, now, this part also you have to make some analysis. When you are making your take home paper, so you have to write, give your interpretation. What do you feel, how the company's share were subscribed, who are the people who gave, the maximum, who were more, interested in this issue. So any story which emerges, you have to describe that. So that story you have to put it your own way. Okay. Maybe the chat GPT may not be able to give you. Of course, you can ask some questions to chat GPT and they will reply, but you have to give your own remarks and interpretations. So the students who give their own remarks and interpretation about these things, about the valuation justification, about the listing performance, so they are stand to get more marks because the paper is easy. You can always, put the IPO on a chat GPT and it will give you all the details, but you need to explain certain things in your own way. Okay, so that will give you an edge over the others. So that is all for the day. I'm not for the day, but for before the break. So it is almost like 12